Well, let's find out what's really going on and how that matters for bond investors. Dr. Stephen Nash is at FIIG in Sydney. Dr. Nash, welcome to you. It's still inside the heart of Europe, France. Tell me about, the appetite for bonds in that space with such a kind of a parlous print on consumer confidence.
Sorry, Carson, I'm finding difficulty to hear at this stage.
Right, I'm just wondering, we were playing a story there on Europe's woes, trying collectively to address the future of banking reforms at a time when France looks less eager than most to engage its own citizens, more than unhappy.
Yeah, well, I think there's considerable problems in Europe at this point. I mean, have a look at French consumer confidence. It's at an all-time low. It's even lower than it was in 2008. The policy alternatives are very limited for Europe at this point. The best way that Europe could treat these problems is to begin to invest in the economy and possibly look at infrastructure development across Europe, but that requires a lot more than the Europeans have approved at this point.
When you say the cost of it is, from what I can detect, you're saying it's prohibitive. What are those? I suppose, borrowing costs currently running at in aggregate?
We've seen a rise in the peripheral spreads of late. We haven't got back to emergency levels at this point, but it looks as though some of the countries are having problems. In particular, Portugal is having a major problem at this point.
And do you see Europe having the stomach to address that, or this is going to be typically another Greece, bound up by years of low, if no growth?
Going on past performance, Europe hasn't really got much record of acting quickly. I think only in emergency situations do the Europeans really come and do anything that's interesting. I think last night we also had the settlement of some of the bail-in provisions, particularly for senior creditors. It looks as though the Cyprus scenario is being in play, where senior bondholders will have to contribute to any bailout situation. So that was to be expected. It really wasn't much anything new there, but there are some more negotiations going on today, and hopefully we'll get more developments, particularly with regard to a single resolution mechanism for European banks.
How was that situation of Cyprus anything other than despicable when it comes to the ability of the Russian banks to walk away with all their funds intact, but for private citizens to take huge haircuts? How can you characterize that as anything other than absolutely sickening?
Yeah, I think it's not the best situation. It's very difficult for Europe to act in any way where there wouldn't be side effects in that situation.
But that was a deliberate caving into one economy at the expense of the many.
Look, I think it was a tricky situation, and now we've got these bail-in provisions for senior bondholders. Now this will affect bond pricing, particularly bank bond pricing going forward. Again, the market really anticipated this quite well. Some of the CDS spreads for some of the French banks, for example, have contracted as a result of recent rallies in equities, but I imagine that over time the extra risks in these senior bonds are going to affect bond pricing quite significantly.
Can we cross continents? Can we talk China? Repo concerns, you would say there is not necessarily the calm that we would have hoped for, even though the equity markets have started to stabilize in China.
Yeah.
What are you saying is the next test?
Look, I think we're going to have to wait till the end of this quarter and see what happens in the new financial year. It looks as though some of the more aggressive banks have been shut out and are not being provided adequate liquidity, so they're really having to pay up for liquidity in the short run. That may affect their profitability as well. However, the authorities have indicated that they're going to intervene if required, and there shouldn't be any default by any of the banks in China, particularly with regard to the larger banks. There were some rumours of a large default by a larger institution last week, but we really haven't seen any more data on that at this point.
Hear you loud and clear. Thanking you so much.
Okay.
We'll talk to you soon.
Thanks very much.
Stephen Nash from